Hello and welcome to the latest news update on Canary News. LVMH, the world's largest luxury conglomerate, experienced a boost in sales at the end of last year, driven by affluent shoppers indulging in the group's high-end handbags and champagne. The company reported a 10% growth in organic revenue in the final quarter of 2023, surpassing expectations and instilling confidence in analysts and investors. LVMH CEO, Bernard Arnault, expressed strong confidence for the current year, leading to a significant surge in the company's shares, marking the most substantial increase in almost 4 years. Despite a post-pandemic slowdown due to inflation, LVMH results, along with those of Richemont, suggest that leading luxury brands weathered the crucial holiday shopping season well. The fashion and leather goods unit, including renowned brands like Louis Vuitton and Christian Dior, experienced a 9% organic sales increase in the last quarter. Surprisingly, the wines and spirits unit, featuring Moët and Chandon Champagne and Hennessy Cognac, saw growth in the final quarter after 2 consecutive quarters of declining sales. LVMH CFO, Jean-Jacques Guyani, indicated that the worst for the cognac business is likely behind, particularly in China, where high inventory levels are still stabilizing. The company effectively managed costs, contributing to favorable profitability levels. Sales growth in Asia, excluding Japan, reached 15%, and the US exhibited a sequential recovery to 8% growth. While the return of mass-market Chinese tourists to Europe is awaited, LVMH benefits from robust spending by affluent Chinese travelers in major cities. LVMH's profit from recurring operations for the year exceeded estimates, reaching €22.8 billion. Arnault announced that his sons Alexander and Frederick would join the company's board, following the family's involvement in various roles within the company. Additionally, he stated that there are no plans to spin off assets, emphasizing the group's strength built on a diverse range of labels. Intel Corporation faced a significant drop in pre-market trading following a disappointing forecast, raising concerns about the anticipated turnaround for the once dominant chipmaker. The first quarter outlook for both sales and profit fell well below Wall Street estimates, reflecting challenges for CEO Pat Gelsinger in restoring Intel's former dominance. While the personal computer business is recovering, there is weakening demand in the lucrative data center chip market. Intel is also grappling with a slowdown in programmable chips, components for self-driving vehicles, and a nascent business producing semiconductors for other companies. The stock plummeted over 12% in pre-market trading, potentially marking its largest fall since October 2021. The company's struggles contribute to doubts about Intel's return to manufacturing leadership. The projection for the first quarter indicates sales of $12.2 billion to $13.2 billion, significantly below the average analyst estimate of $14.25 billion. With a profit of 13 cents per share, excluding certain items, compared to the projected 34 cents. Gelsinger acknowledged the challenges in the first quarter but expressed optimism about improvement in the rest of 2024. Intel's efforts to re-establish manufacturing leadership remain on track, with a focus on staying competitive. Gelsinger emphasized that Intel is no longer losing sales to competitors in PCs and data centers. The company's push into manufacturing chips for others, known as the foundry industry, is a key part of Gelsinger's plan. While specific large customers involved in the project remain undisclosed, Intel stated it had $10 billion worth of lifetime deal value orders for chip production, indicating progress in this new area. However, Gelsinger acknowledged the need to secure more significant deals in the foundry business. Despite challenges, Intel aims to make headway in AI accelerators and anticipates increased demand for regular data center processors due to the growth of the AI industry. Intel's gross margin for the first quarter is projected to be 44.5%, lower than the estimate of 45.5%, reflecting challenges in profitability. In the fourth quarter, Intel reported earnings of 54 cents per share on sales of $15.4 billion, surpassing analyst estimates. Data center sales fell short of projections at $4 billion, while client computing, Intel's PC chip business, exceeded estimates at $8.84 billion. The PC market is expected to recover from inventory gluts, with total shipments anticipated to reach approximately 300 million units annually. However, in the server market, Intel faces increased competition, and some major technology spenders are designing their processors. Intel's outlook is also affected by its partially spun-off division, Mobileye Global Incorporated, which provided a full-year forecast below analysts' predictions earlier this month. Intel remains the majority owner of the autonomous driving technology company based in Israel. JPMorgan Chase & Company. CEO Jamie Dimon has orchestrated a reshuffle within the bank, positioning key executives for enhanced roles as part of succession planning. Jen Peepsack and Troy Rohrbaugh now lead an expanded commercial and investment bank, while Marianne Lake assumes sole control of the consumer and community bank, having previously co-led it with Peepsack. This strategic move, occurring midway through Dimon's 5-year retention package, aims to provide top leaders with new challenges as the bank seeks potential successors. While JP Morgan has recently achieved record profits, insiders have anticipated leadership changes to prepare for Dimon's eventual succession. Daniel Pinto, who has headed the corporate and investment bank since 2014, will shift focus to his broader role as the company's president. Additionally, Vis Raghavan will lead the global investment banking franchise, and Doug Petno's commercial bank will now fall under Peepsack and Rohrbaugh's oversight. This restructuring highlights 3 JP Morgan veterans, Lake, Peepsack, and Rohrbaugh, as potential successors on different career trajectories. Lake, 54, with a prominent history as CFO, now oversees a substantial unit within the bank. Peepsack, 53, who succeeded Lake as CFO, sees her role expanded to enhance her Wall Street experience. Rohrbaugh, 53, who ascended through bond trading, gains broader responsibilities in the bank's wholesale business. These changes aim to leverage the strengths of JP Morgan's senior management team and position the bank for continued success. That is all the time we have for today. Tune in again next week for the latest news update. Remember to like the video and subscribe to our channel.